Welcome to Schedule A, Lesson 1. Our objectives in this lesson are to understand when you can use Schedule A and to identify the different expenses that may be deducted on Schedule A and then be able to fill out key areas of Schedule A. In order to use Schedule A, you must file Form 1040. That's the long form. You cannot use 1040EZ or 1040A. Those are considered short forms. If you use the two short forms, you must use the standard deduction. We did a couple of scenarios in a couple lessons prior to this one. In the first scenario, 1040EZ, we had a single taxpayer who received a standard deduction of $10,000. That $10,000 was his standard deduction plus an exemption for himself. In the 1040A that we looked at, we had a married filing joint couple that received a standard deduction of $12,200, plus they had exemptions of $3,900 each. You will always receive your exemptions no matter which form you file. The difference here, though, is that instead of the $12,200, if that couple had have owned a home perhaps, it might have put them in a situation where their itemized deductions were more than their standard deduction of $12,200. You will always get to choose which one is higher, and that's the one you get to deduct. You must also meet certain thresholds to deduct certain items, and we'll look at that soon. Here is a Schedule A. Notice it says itemized deductions, and that's because all the deductions you can take are itemized out separately. We'll be looking at medical and dental, taxes you paid, interest, gifts to charity, casualty and theft losses, job expenses and certain miscellaneous deductions. There's an other miscellaneous deduction amount, and then you total. We'll not be going through every single deduction you can take, but we will be going through some of the more typical ones that most people end up taking. Let's look first at the medical and dental and taxes you paid. In this top category, medical and dental, in line 1 right here, you would include all your medical and dental expenses from the year. Now you might want to see the instructions if you have a medical or dental expense that didn't come from a doctor. Say, for example, you went to Target and you purchased teeth whitening, a teeth whitening kit or something like that. That would not be deductible. Also, perhaps you paid for aspirin or cough syrup. Well, that's just over the counter and it's not prescription, so that's not deductible either. However, prescription eyeglasses, prescriptions in general, doctor's visits, anything official would be deductible. Okay, on line 2 it says enter the amount from Form 1040 line 38. Well, line 38 on that form is your adjusted gross income, or AGI. Again, there's that figure, adjusted gross income. That's very important. It's important here because when we talk about thresholds, we will be comparing your expenses to your AGI. So let's look at how we do that. On line 3, we're going to multiply line 2, or your AGI, by 10%. And then we'll be putting that here on line 3. Then on line 4, we will subtract line 3 from line 1. So in other words, you can only deduct expenses that exceed 10% of your adjusted gross income. And we'll be trying an example shortly. The next category is the taxes you paid. First, we have state and local. You either get to deduct your income taxes that you pay for the state of Colorado if you live here or a different state, or you can choose to deduct the sales taxes you pay when you purchase goods and services. Generally, most people choose the income tax route because that yields a greater tax. You can find this on your W-2, or if you filed a state tax return last year and you owed, then you can also deduct what you owed in this year because you paid it in this year. Next, we have our real estate taxes. These are reported to you on 1098, and these come from owning property. When you own property, you have to pay real estate taxes. Those are deductible. Next, on line 7, we have something called personal property taxes. All this is the owner's tax when you register your automobile every year. So if you look on your auto registration, you'll see a little box that says owner's tax. That amount is deductible. There are other taxes, but we won't be covering those at this time. Let's try a scenario to calculate our medical and dental deduction. You are in your 3rd year out of school, you're doing well, and you've calculated that your AGI is $32,500. Here's your medical and dental expenses from the year. You had doctor's visits, you purchased a bunch of vitamins and herbs, you had a little bit of prescriptions, you decided to get braces this year, but your insurance reimbursed you $1,500 during the year, and you had some dentist co-pays of $90. Well, if we add all that up, that's $7,145. But can we take that full amount and put it on our form? The answer would be no. We would need to subtract out the non-deductible prescriptions, which is the $200. These are not actually prescriptions, right? These are just over the counter, so they are non-deductible. We also have to subtract the insurance reimbursement. Since we received this back, we didn't actually pay it. That means we actually have $5,445 that we would report on line 1. If we go back to the medical form, here's line 1, medical and dental expenses. That's how we get the number to report there. Okay, now, how do we determine the threshold? Well, remember, we need to look at 10% of adjusted gross income. So we need to create an algebraic expression that represents what we can deduct. Okay, so let's take what we spent, $5,445, and subtract 10% of our adjusted gross income. So we would subtract 10, or 0.10, times our AGI to get the amount that we can actually deduct on our itemized deduction worksheet. And that comes to $2,195. This is a very difficult deduction for people to take because of that 10% threshold. Notice that you had to have quite a bit of medical expenses in order to deduct any, and in fact, you actually deducted less than half. All right, let's look at interest that you've paid. Well, there's different types of interest. There's home mortgage interest and points. Points are something you pay when you first purchase your home, typically. And again, the home mortgage interest and points are usually reported to you on this form, 1098. Sometimes they're not reported to you, and that would be on a different line. Then there's mortgage insurance premiums. Oftentimes, if you finance more than 80% of your home, you're required to pay these insurance premiums, but at least they're deductible. And then some people will have investment interest. Not always, unless you have a lot of investments, but every once in a while. So none of this is subject to any threshold. Let's continue on. Here's a typical 1098. It has some other things on it, but they're varied often. So what I want you to notice is real estate taxes. Notice that it is reported to you on Form 1098, typically. Also, our mortgage interest received is reported to us there. And then if we did pay points, that will show up as well. And finally, mortgage insurance premiums. So oftentimes you can just look in one place to find these types of deductions at the end of the year. Now let's look at gifts to charity paid by you and casualty and theft losses incurred by you. Well, anytime you give something to Goodwill, Habitat for Humanity, or if you give somebody a cash contribution, those are all 100% deductible, typically. It's broken apart by cash and non-cash. You just have to be careful. If you give more than $250, you have to do some additional information as far as completing more forms. Here it is. You must attach Form 8283 if you give a gift of over $500, but if you give a gift of $250, there are more instructions with that as well. Again, none of these are subject to any threshold, but just be careful about how much you give to make sure that you've filled out the appropriate forms. Casualty and theft losses are not something that people typically deduct. However, with all of the floods and wildfires, more and more people are starting to deduct casualty losses. If you're going to do that, though, you must attach this form to figure out how much you can put on this line. There are some limitations and thresholds with that as well. Now we have job expenses and certain miscellaneous deductions. Anytime you work for somebody, you'll have job expenses. Sometimes you choose not to deduct these because they're small and you won't get a deduction. But some people travel quite a bit, buy a lot of supplies, and it's worth it for them to fill this out. So we have unreimbursed, notice your employer doesn't reimburse you, for employee expenses. And here's some examples. There is a form, however, that is required to be attached if you do deduct these. Then we have some tax preparation fees if you pay someone to do your taxes, but hopefully at this point maybe you can do your own. And then there's some other types of expenses. Some people have safety deposit boxes, for example. When you add all these up, look what happens on line 25. Once again, you need to enter your AGI. That's because we have a threshold here. We will multiply that line by 2% this time, and then subtract that from our total job expenses and other expenses. So what is that saying? That's saying that we can deduct all unreimbursed employee expenses and other types of expenses that exceed 2% of our adjusted gross income. Let's try another example. You have a job as a sales rep for an appliance store. Their adjusted gross income, or your adjusted gross income, is $34,500. But you incurred these expenses related to your job. You had some parking fees. Maybe you had to park downtown quite a bit. And then you had to purchase some supplies. You had some vehicle costs and sale charges. That gives you a total expense of $1,920. All right, let's do our 2% of AGI calculation. Let's take our total expense and subtract 2% of our AGI. That means we can deduct $1,230. Notice that you can usually deduct more of these because it's only subject to 2% versus medical and dental, which is subject to 10%. All right, let's sum up. We have another miscellaneous deduction category. We won't go into that because that's very rarely used. Well, at the very end, it asks you if your AGI is over $150,000. If it is, then your itemized deductions are further limited. But we won't assume, or we will assume that we don't have that situation, so we'll always just say no, your deduction is not limited. Then what we'll do is we'll add all the numbers in the far right column for lines 4 through 28. We'll put this in here and then also on Form 1040 on line 40. Notice here it says if you elect to itemize deductions, even though they are less than your standard deduction, check here. There are certain tax reasons why people might do that, if they're married filing separate, for example. But again, we won't get into that yet in this lesson. Okay, here's our 1040. Do we take an itemized or standard deduction? I just wanted to show you this. If you look at line 40, now it says itemized deductions from Schedule A or your standard deduction. So you get to choose which one you want, and then that becomes your deduction. Obviously, if your standard deduction is still higher, then it would benefit you to choose that. Okay, that concludes our lesson today on Schedule A.